Let's check in on shares of Coveo. They are popping here after quarterly results came in better than expected, and the company is showing that its generative AI adoption grew more than 50% from the last quarter. The company has partnerships with Amazon, Salesforce, and Shopify. It counts customers like NVIDIA, Pfizer, Adobe, Zoom as its overall customers. For a look at the business, we've got Louis Tetu, CEO of Coveo. Thank you so much for joining us, Louis. You've always been an artificial intelligence company before it was cool to say that, but generative AI is a whole new beast altogether, and that's where investors want to see momentum. What can you tell us about how that part of the business is doing?
Right. Well, generative AI for us is really, good morning, Amber. And generative AI for us is really a complement to what we do. So Coveo has been involved since 2012, and prior to that in search engines, and since 2012 in bringing AI to what we call points of experience. So, commerce, customer service, commerce experiences, websites, workplace experiences within large enterprises. And so, AI powers a lot of that. Generative AI adds the conversational and advisory part of a digital experience. So for us, it was a natural complement. Obviously, when ChatGPT was released in November 2022, it took the market by storm in a way, and sort of made people sort of realize the importance of AI, despite the fact that this is how your Netflix experience and Shopify and Spotify experiences and Wayfair experiences had been working for a long time. And so it's been a paradigm shift, obviously, in the minds of people, less so for us. I think our customers, who, were mostly large tech companies, understood that paradigm. And now the market is obviously has learned a lot and is shifting into adoption, and that creates the kind of inflection, in fact, that we were anticipating.
And yet, because there's so much momentum in AI, investors want to see that top line growth. Growth has been slowing or decelerating, I should say. There's still growth. This quarter was only about 5% growth. So help us reconcile the seemingly insatiable demand for AI tools and the decelerating growth that's happening at Coveo.
Right. Well, as I just mentioned, Amber, what happened in AI, so since our IPO, when we had our IPO on the TSX in November of 21, and we were a much higher growth company until ChatGPT hit the market and froze everybody. Amber, everybody, if you look at investors flocked to the silicon layer and to the hyperscalers and the data centers and so on in anticipation of demand in AI, but it was hard for investors to distill, what were the applications, what are the consequences of AI for businesses in terms of compliance, security of data. Big businesses cannot hallucinate. And basically working with current data and et cetera. So that took time, and companies like Coveo were in a bit of a holding pattern, working with our customers, and while customers and companies, every company was testing and learning and experimenting. Now it's been 2 years. It's no longer okay to have a conversation about AI and an experiment about AI within businesses. Businesses are now moving to adoption. And you're going to see a number of companies, including Coveo, taking advantage of that, where the demand is now moving to practical applications, the operationalization of AI to use business data and create real benefits. And that's what we're seeing right now, and that's what we had predicted, but that also explains a little bit of a plateau in terms of growth. And now we're seeing, we said last quarter, we were seeing clear signals of the inflection, and we've actually showed how this has clearly materialized this quarter, and that gives us a lot of confidence for resuming growth acceleration in the future.
So are you being conservative in the next quarter forecast that still only calls for between 5 to 7%? And I think there was a warning that 2025 you could be kind of at the low end of your sales forecast.
Well, we've announced we didn't change our guidance for 25 because, we're seeing how things unfold and there's still a scenario, for that range. But we certainly guiding the market. Look, we've been doing this for a few decades now, managing public expectations and so on. And it's always good to guide to the right place. So we've guided to the low to mid part of the range. The more important thing is that investors understand our business model is we are a subscription company. So we book subscription, which are 82% gross margin ratable subscriptions, with large enterprises that get recognized on a daily basis actually in the future. So when we enter into new contracts today, they have an effect, obviously, in the future. We have to put our actuary hat as opposed to our accountant hat when you look at SaaS companies like Coveo. So the effect of momentum today doesn't necessarily happen as much next quarter. It happens gradually, over the next year and thereafter, because our retention and what we call our net expansion rates are beyond 100%. They're actually at 104% right now, which means $1 today is on average $1.04 next year and so on. So it's at 82% gross margin and 104% NER. It's an excellent model, but that materializes in the future.
That's good perspective. And you mentioned, kind of the challenges sometimes of being in the public markets. And I wonder to what extent the shares have been dented as well by one of the top shareholders in the company. It was a pre-IPO shareholder, and concerns that they would be looking to sell. I'm talking about Elliott Management. I've heard that that's been a bit of an overhang on the stock, concerns that they're going to be, flooding shares into the market. What can you tell us about that, or your conversations with them?
Well, I can't speak on behalf of our shareholders. What I can say is we launched a substantial issuer bid because we definitely think it's in to the benefit of shareholders to buy back our shares. So we have both an NCIB running, and we've been buying shares. And over the past couple of years, we've been buying $75 million US back of our own shares. And the way this works, without getting too much into the weeds of this, is that by tendering your shares, in the substantial issuer bid, a shareholder can get a bigger proportion of the allocated sum. So I wouldn't necessarily infer that a shareholder tendering their shares in a specific substantial issuer bid event is necessarily all for sale. But Amber, you have to ask them. The more important thing, I think, is as a company, we're focused on growing the customers and resuming, growth. We operate on a metric that we call the Rule of 40, which is essentially the combination of your growth rate and your free cash flow. We announced $10 million of free cash flow this year. We were a year and a half ahead of our IPO expectations, in terms of EBITDA and cash flow. So we continue to be really focused on that. And of course, ultimately over time, we certainly have a view that today there is not a perfect alignment between the multiple, if you compare it to the average multiples that a company of our profile would get. But that all sorts out over time in our experience, and our shareholders, our public shareholders, and they can do what they want.
Well, recently it has sorted out with a bunch of Canadian tech companies by going private or getting taken over, especially that 2021 class of IPOs. And I'm wondering if those are considerations that Coveo is talking about.
Going private or being public doesn't make any change to the core business, Amber. It's about the roster of customers that we're able to demonstrate, and the growth in top line and the health of our business. Our unit economics are extremely strong. Our growth we think will resume very nicely, and whether you take it private or you're public, Coveo is a company with $130 million US on the balance sheet with no debt. We have clearly the means of our ambitions, and we're extremely competitively positioned in a very important market. And that's what, as a CEO and chairman, I focus on all day, every day with the team. And we'll see how things play out over the next few years.
All right.